Hi guys, welcome back to Sir TV. I'm Lord Takpata, your usual host. So, welcome to 2024. We're actually going to be talking about how to plan financially for 2024. I know you guys have been waiting for this video and wondering what is happening. I've been seeing the viewing. You're busy checking what's going on. What is the plan for 2024 financially? How can we plan? Yes, this is what we're going to be doing today, and I have my usual guests on the show that we normally talk about these solutions and how we're going to do it. So this is what we're going to be tackling together with it today with Bupelo. Hi Bupelo, welcome back to Zero TV.
Good day, Lorato, and thank you for having me back.
Emma, thank you. So today we're actually going to be discussing, financial smart ways to start 2024. Let's talk about that. Let's help the viewer and the Swero fans, the Swero tribe on how to plan for 2024 financially. We're gonna try and be as realistic as possible, guys. We know how tough it is. We know how tough it's been. But let's first reflect on 2023. What happened in 2023, particularly on the market part, and as well as how hard it was for people. Let's reflect on that, Bupelo. The interest rates, Bank of Botswana actually reduced the interest rates in December 2023 to 2.4%, pushing the cost of borrowing to the lowest since July 2022. Let's talk about that and how it actually affects the person on the ground. What does that mean for the person on ground?
Yeah, so you're absolutely right, Lorato, and that wasn't the only decrease in interest rates in 2023 done by Bank of Botswana. There were numerous ones.
Yes.
And the reason why Bank of Botswana actually reduces interest rates, they use it as a technique or as a measure to try and tackle inflation. So what it means for the average Motswana when these interest rates are reducing is that, as Lorato already mentioned, the cost of borrowing is going down, and that means that debt becomes cheaper, basically.
Yes,
that's essentially what it means.
Yeah.
So if you have a loan, now you're going to be paying the interest rate that you're going to be paying on that loan or on that debt, whatever it is going to be reduced.
Yes, and that doesn't mean you should, what the Bank of Botswana is trying to do is trying to create some room for you to be able to have more spending money. But what that doesn't mean, it doesn't mean you should go and get more debt. No, that's not what.
Not at all.
No, that's not what. That's not
the point.
That's not the
yes,
point.
The point is just to ease the pressure that the consumer might be experiencing as a result of the constantly increasing prices, right? But it doesn't mean that just because debt is becoming slightly cheaper doesn't mean that go and add.
No, that is not what communication is, guys. So don't go and get debt just because the interest rates have gone lower and now you feel like, it's cheaper now to borrow.
Yes, and I think maybe also to highlight, it might also be worth mentioning that it's actually not all debt that will be tied to that Bank of Botswana rate. Usually, excuse me, it will be applicable to loans or debt that we get from banks, from the commercial banks. But if you go to a machonisa, is really not operating.
The black markets.
Yes, they're not using Bank of Botswana rates to set their interest rates.
Yes, they are not necessarily in the system, basically. Yes. So don't use it against the machonisa. But we do discourage machonisas in the first place because the interest rates are quite ridiculous. This includes Bomotelo as well. It doesn't necessarily affect them as well. So don't try and hold them accountable to that as well. But we do encourage that. Can we just charge reasonable interest rates in whatever business that you're doing? Now, also the inflation fell to 3.1% from 3.2%. It actually fell, just dropped in October. Within the central bank's preferred range between 3% and 6%, which is actually a good thing. Now, Bupelo, as much as inflation is dropping and interest rates are dropping, but now we're not feeling it on ground. People are not feeling it on the ground. The cost of living is still pretty high. It's not only utilities, it's groceries, it's petrol, it's a lot of things. Can you explain why it's actually not as much as it's been decreased, why are we not feeling it on the ground?
Okay, yeah. So that's the thing with inflation as monitored by the Reserve Bank, in our case being Bank of Botswana, and maybe I will just call it inflation or the price increases that we experience as the layperson on the ground. It's going to be different because Bank of Botswana, the way they measure the price increases or the increase in prices, they use what we call a CPI, Consumer Price Index basket. So in that basket, like just imagine a shopping basket. So they're going to be monitoring or tracking price increases of a certain number of goods, like a specified number of goods.
Yeah.
So when they say inflation is at, what is it at now?
Is at 3.1%.
When they say inflation is at 3.1%, it is based on the price increases of those select goods that are in the CPI basket. But you, as the consumer, the price increases or the impact of price increases may be different for you because you have a different and even wider shopping basket. So your shopping basket will not necessarily match that of the Bank of Botswana, and that's the reason why you may find that when you go to the shops or the economists will be reporting that inflation has gone down, but then when you go to the shops tomorrow, you see that prices have gone up. That's because your good is not
necessarily in the basket. Yeah, okay. Which is probably more or less not most of the time. So also what happened also in the previous year and even government financial year, we saw an increment back to 14% from 12%. Remember, it was decreased to 12% during COVID, and
this
then
is VAT.
Yeah, VAT. Yes, VAT being increased. Now we've gone back to 14%. This also affects the cost of living, basically even the cost of your baskets. Basically, these are one of the things that actually cause it. And I think the reason why we are communicating this is that the consumer understands why also prices are this high, because this is actually what happens, and why the government actually increases from 12% to 14%. I think maybe we can touch it on it a bit and try and explain to the consumer what this means for the government and why they're increasing the VAT in these times.
So if you recall, VAT was reduced to 12% as a COVID-19 as a measure to control the
Inflation.
financial constraints that the economy was under due to COVID-19, right? Just to offer us some reprieve as consumers. But the consensus or the belief now is that things have, the effects of COVID-19 for all intents and purposes are now done, and we expecting or hoping that you as the consumer have gone back to normal.
Yes.
To how things were, and that is why the government probably saw it fit to revert the rate back to 14%.
Yes.
Because you need to understand that VAT as a form of tax is what the government uses also to earn its revenue so that it can continue to run the country. But one thing that we need to be aware of is that any costs that a business, or let's just use a retailer as an example, like a retailer, let's use a supermarket. So if the government says they are increasing VAT, right? What the retailer is going to do, or what your local supermarket is going to do, is they're going to pass on that 2% increase onto you as the final consumer. So that means you as the final consumer, you should expect to see price increases.
No, absolutely. That's what they're supposed to do anyway.
That's what, yes,
yeah,
exactly.
it's supposed to collect on behalf of BRS from the
Absolutely.
consumer. So that's actually how it's done. And like you're saying, the main point is not to necessarily punish you as the consumer. That's not what the government is trying to do.
Yeah.
They're also trying to make sure they can be able to deliver on the goods and services, all the services that they need to be rendering to. This is obviously the cost of construction of roads, the cost of construction of, hospitals and everything that is running the country, basically. Yeah, this is why they're also last year we also experienced a lot of job losses. We also experienced a lot of restructuring and retrenching in a lot of businesses. And I know that a lot of people went through a lot. I mean, we are in the business of financial advisory and we get to then see it, because then we'll be called to come and help with the restructuring process in terms on the financial advisory and financial planning aspect. What is your experience? I mean, what do you think, and how people now can really, how can we plan now going forward? Because, as much as people had experienced this last year, what can we do going forward? What do you think? Now we're starting to plan our 2024.
Okay.
Yeah.
Yes.
These are the people that have been affected by the job losses.
For those that have been impacted by
the
restructuring, retrenchments, and all of that. So that situation, that particular scenario, is actually one of the most difficult to navigate financially. And also at the same time, it puts you in such a vulnerable state that the decisions that you make during that time when you don't have a job, therefore things are hard or tough financially. The decisions that you make now, for instance, if you don't have a job now, or if you've recently lost your job, have the impact or the effect of having very long-lasting impact on your financial situation. And the reason why I say that is because I'm just getting to the measures or what you can do. What you want to do is you want to avoid getting into debt.
Yes.
Because, I mean, when you think about it, yes, you may not have an income, but you need money to survive. But if you go and get debt, where and how are you going to pay it off?
It's just going to dig you deeper.
So you're just essentially digging yourself deeper into a hole that you most likely will struggle to come out of.
Yeah.
And these are things that end up resulting in stress and even depression and the like.
Yeah.
So, and second thing, you want to intensify. Yes, the job market is not attractive right now. That is why we're seeing high levels of unemployment. So you just try as much as you can to see what kind of job you can find. And speaking of jobs, what we tend to do is you will say, okay, I am Bupelo, I am qualified as, or I'm a finance person, I'm a finance and investment person. Therefore, when I lose my job, I'm going to look for a similar job within the finance sector. That's well and good if you can find it, but you need to be more realistic. This environment that we are operating in right now is just not a nice one. So look at other sectors. What else can you do?
So you're saying, what you're saying is you don't necessarily have to stick to your own.
Yes.
Yes, what you're saying is it's okay to diversify.
It's okay and you should diversify. What can you do? You could actually take a short course for like 4 to 6 weeks or something just to upskill yourself.
On risk or marketing or whatever, or
something. And then look for a job. Guys, when I say look for a job, I'm not even like a job outside of your sector. It doesn't even have to be an office job. You could actually, if you like exercising like me, you could get
you can do your yogas and Pilates. Is that what you're saying? So it's
you could maybe become a spinning instructor.
Yeah.
Then you'll be getting
some sort of income. So basically, what you're saying is, besides looking for a job outside your outside your spectrum, you can also try and find what else you're good at, and create income out of it. That's basically diversifying your income. Besides the fact that you're unemployed, let's say maybe you are unemployed because of the the job losses, try and find ways on how you can make income, besides if you can't find a job. This is what you're saying can be gardening. If you're really good at gardening, why don't you ulema and sell? Because,
Absolutely.
why don't you, teach basketball if this is something that you were actually good at high school at one point? Why don't you touch on that?
You can teach kids on the weekend.
Yeah. And all that. You can teach kids on the weekend. You can do cooking. That's people who are just naturally good at cooking.
And who actually enjoy being in the kitchen.
Yes.
Unlike some of us.
And baking and all that, and actually try and sell the food. I mean, that's what you're basically saying. But this also applies for the ones who are employed as well. Now, we need to diversify our income. Now, let's get into our 24. We're now getting into our 2024 plans. But now, I think we're going to go on a break. Okay. And now we're going to now get into the nitty-gritty of getting into 2024. How are you planning 2024 this year? All right, we'll be right back. Hi guys, and we're back. We're basically discussing, financial goals for 2025 with Bupelo in studio. Bupelo is actually my usual resident guest that everything personal finance, everything finance that we normally discuss and bounce from each other. So Bupelo, yes, let's plan for 2024. Yeah, number one, revisiting your budget, your income versus household expenses. I can just imagine how it is right now for many people where they have this income, but the expenses are quite heavy. It's a really, or some don't even have an income anymore, or the consistent income anymore. How can we revisit? What do you think we can do to revisit our budgets this year?
Yeah. You're absolutely right. With regards to the income. The expenses rather being much higher than the income that people are receiving. And as young people would say nowadays, the math is just not mathing.
It's not mathing.
But just because the math is not mathing doesn't mean that you abandon your plans or you abandon prudence. This is actually the time when people need to be even more prudent and be very smart and intentional about how they spend their money, because for a lot of us the income is limited, and a lot of us, we haven't received a salary increase in a long while, or at best it's been quite minimal, not keeping up with inflation, right? But what we need to do as a people or as consumers, we need to adopt the mentality to live within our means.
Below.
Yes.
Below your means. If you're earning 20K, have a budget of about 17.
Of less than
less than that.
20,000, right? And it is for the simple reason that if you're just going to force matters and insist on having high expenses, what's going to happen is that you're going to have to make up for the extra expenses by getting into debt.
You're going to start borrowing money.
And that is just going to put you under pressure, and it just becomes evolving. You end up being stuck in what I call a debt trap. And a debt trap is basically where you keep having to get more debt just so that you can keep the wheels moving.
So basically what you're saying is, what I'm getting you and understand is that, sometimes you're used to a certain lifestyle. And you're used to having your Mac, you're used to having, the 2 cars, the Mac and the thing, and, and the math is not mathing, like you're saying. And, the kids are at, this particular schools, you're living in this house with the pool, with everything else, and you're obviously used to a grocery bill of about 5,000 a month. And, and things are just so expensive, and you're not being able, you're suddenly finding yourself unable to meet all these expenses at the same time. So then how do we do it? We need to, I want us to be as practical as possible. For instance, giving that scenario, you're finding yourself in that particular scenario, and you are realizing my 40,000 or my 60,000 salary per month is no longer enough for this. Where can one start in that particular?
You first start here. That is the first step.
In your mind.
Yes. It starts with your money mindset. You need to be realistic. When it comes to money, being realistic is the best thing that you can do for yourself.
We
So when
start
I say,
there.
so when I say it starts here in your mindset. What I mean is that you need to change your mindset. That means changing your relationship with money. So your relationship with money should be such that it does not control you, but rather you are in control of the situation. And it also means another thing that's very important is not putting yourself under pressure. If I'm friends with Lorato and she's living a certain lifestyle, maybe because she can afford it, or maybe she drives a certain car, it doesn't mean that just because we're friends, I must go out now and
Get the
buy
same car.
said car. Or if Lorato keeps calling me saying, let's go out, or let's go on holiday, or let's go to Joburg like almost every other weekend, and I can't keep up realistically, I'm not able to
anymore,
keep up.
yeah.
Yes, then I must just be honest with myself and tell her that, okay, look, I cannot go with you. It's okay. Guys, it really is okay
To just come back.
You
Yeah.
are not obligated to live a certain lifestyle. You actually, no one is putting you under pressure but yourself.
Yes.
So that is firstly where it starts. And then the second thing that you want to do is to, as Lorato mentioned, the hope is that you've been operating off of a budget already and now you just go and revisit. Revisiting it, excuse me, means you taking a closer look at what needs to be cut. Be honest with yourself. Something has to be cut.
Absolutely.
Something can. There's
You
always
can do without
things.
something.
There's always things
that can be
not
cut.
a thing, but things that can be
Yeah.
cut. Some maybe they cannot be cut, but they can be reduced. For example, groceries. Chances are for a lot of people who are spending like the 5,000s or even more on groceries, they have things that go bad all the time.
Yes. Or they don't need some of the stuff in there. Like, you don't need ice cream.
You just go to the shop and then you see them like, you know what, it would be nice to have this. I'm going to put it in the trolley. But you don't really need it. So, yeah.
Look at your needs. Basically, how I normally would say is, as well, just adding to that is, look at what is the most important thing for you. What can you do without? I call it, what is your rich life? What does your rich life look like for you? Especially when on an economy like this, you can actually look at things that, I'm okay. I don't need a car, an expensive car, but I need my children to be in this particular school. What is important for you? And what is, for you, what is the most important for the expensive car or the kids in a good school? Or let me not even say
you can't have both.
You can't have both sometimes. Sometimes you can.
People can. But
not all of us can have it at the same time.
Yes.
And it's okay. And it doesn't mean you're not gonna have it eventually. The most important thing right now, we're now discussing. We're discussing how to manage in this economy, and you're feeling under pressure. And you're looking at yourself. You have all this lifestyle that you were used to, but the math is not mathing like you were saying. We are not sleeping at night, but you are really trying to stay above the water. Your head is trying to stay above the water. What can you do in that instance? Just look at what is important to you. What is important first? Is education important, more important for your kids, for your kids to be in a certain school than a car? A certain car. Instead you get a cheaper car and they'll still arrive at that school. Even with the cheaper car, And then what happens when you actually remove the expensive car is that you are no longer paying 10,000 pula towards a debt of that particular car. When you sell it and you pay off the debt, that relieves you. You're also able to just sleep at night. And how do you do that? You have a conversation with your kids. The thing with children is that they are so understanding, they can adapt.
Very adaptable.
Yeah, very adaptable. So if you feel like maybe the kids are going to feel a certain way, we're driving, a Ranex now to this school, trust me.
Which is good also. It just teaches them to be humble.
It also teaches them that life does get like this, but it doesn't have to be bad. It's not a bad thing. It's actually a good thing that we are downsizing. It's very, very imperative to also for them to actually see it, that okay, so we can downsize and it can be done and we'll still be okay
and still be happy.
and still be happy. You know what I mean? And then you get to keep that thing that is very important to you versus having everything important to you. You know, you can't have the car, as much as the car is important to you. What is more important, the car or the education? That's what you look at. Housing as well. Sometimes you find yourself in an expensive house. What do? You can rent it out and get into a cheaper house. You see, so that you sleep at night and you're still able to keep that house.
That's actually what smart people do.
Yes.
Yeah.
That's what smart people do, because you'll find out maybe the big house comes with the pool, comes with the gardener, that comes with so many expenses. Also, certain areas you pay more for a lot of things.
Yes.
You pay more electricity
Even
and
for
water.
water.
Yep. You'll be surprised that when you move to a cheaper neighborhood, how actually cheaper things get as well for you, and you're able to sleep at night. I don't know. What do you think about that?
No, that's absolutely true, Lorato.
Yeah.
I mean, it's really just about learning and knowing when it is time for you to reduce or minimize your lifestyle.
Absolutely.
Yes.
And,
But that is the most difficult thing that people find.
Absolutely.
Yeah, like people don't want to move from eating lasagna to eating beans. But it's okay.
And who cares? And I think the main
And
important...
you can make the beans yummy.
Yes,
too.
they are quite yummy actually.
Yes.
But at the same time, but what is important, Bupelo, is I think the reason why most of the time people don't want to downsize or don't want to, because they care about what other people would say, and those people are not helping you. I would understand if you cared about what these people will say, if they're helping you sleep at night and they're helping you with your groceries and your bills. It's just at heart. So if they don't have that at heart for you, then why do you care?
And
you
also
see,
we have this thing where we believe that people think about us a lot, except that they don't.
they actually don't.
Because everyone has their own concerns, issues. Everyone is just trying to navigate their life. Yes, they may talk about you for all of what, 5-10 minutes, and then that's
life
it.
moves on.
And then life moves on.
Yeah. So what is your take on combining your income and your bank accounts as a married couple? That as well, because it counts on the household budget. So as a married couple, how do you think? What's your take on that one? Yeah,
I think that is not a bad idea, and the reason for that is because finance or money issues are actually the number one cause of or reason for divorce. Just worldwide.
Yes.
A lot of the times when
main one.
Yes, a lot of the times when people divorce, it's due to finances. And it's not even the ones who are on the low income spectrum.
Only.
No. It cuts across the different income levels. And the reason for that is because people are married, like married people will be together and they interact or live a united life in all other aspects except for money, because everyone has their own separate bank account, they have their own income, and therefore there is no accountability. And a lot of couples don't actually make the time to sit down and discuss what they're going to do with their money. So then you end up finding that you have a partner and you know that they're earning an income, but you don't know where their money is going. So having a joint account might actually be helpful in ensuring that you both know
where money is
going, what is happening, and it will actually help you to have more conversations.
Yes, I actually agree with that. Bupelo, is that, when you combine I know it's not a very popular thing, actually. I know I'm going to become unpopular for asking to combine bank accounts, but it's so important to do that. Combine your income so that you are able to plan together. Then how do you do that? When the money is in together, you are able to budget together. Make sure that the bills are paid exactly where they're supposed to go together. You say, well, let's pay for that, let's pay for this, and then you are able to give yourselves allowances. This is what we actually, you are giving yourself allowances of saying, you know what, then you do whatever you want to do with your allowance, and you do whatever you want to do with your allowance. And money goes to savings accounts, money goes to, investment accounts, something that we're going to speak about next, after actually talking about this. That's how you are able, like you're saying, it creates conversation. I feel like it also eases a lot of issues in the marriage, that you're able to plan together, and it just, seamless.
Yes,
You sleep at night?
Yes, no, absolutely. And you're absolutely right. Just having a joint account or a shared account doesn't mean that you have to lose your independence, because you can still have that your separate account that you are running by yourself, where your allowance goes to. Yes, absolutely. And then you spend your money however you want without having to be accountable to anyone.
And it's nice to have an accountability partner. It really, really is a good feeling, guys. It's a really good feeling to do that. To have somebody that is you're accountable to, and you're able to plan together and actually, get each other out of whatever situation that you could be in. So try that and see how it works out in your marriage. I think it will work better. I mean, of course, we are discussing where it's a healthy marriage. There's no abuse, there's no unnecessary debt, and all that. This is where we're assuming a situation like that. All right, next, emergency funds. Having an emergency account. Protect your emergency account by all means. That's what I wrote here. What do you think about having an emergency account as part of the planning for 2024?
I'm a big proponent of having an emergency fund. I don't always prescribe how much you should have in it, and the reason for that is because I understand that different people are at different levels or circumstances. If I say to someone, you should have like 6 months of your expenses saved up in your bank account, and that person is like swimming in debt, it may be a bit unrealistic for them. And also appreciating and acknowledging that saving is actually not something that is
uncomfortable. It shouldn't be uncomfortable.
Also it's not a natural habit for a lot of people. A lot of people really struggle with the habit of saving. So I always say the most important thing is for you to start. Just start. And if you know yourself when it comes to money, if you know that you struggle with saving, you can start small. It can even be 100 pula, just so that you develop that habit, right? And then once you are at that comfortable place and your financial situation allows, then obviously increase, and keep at the back of your mind that you want to have at least like about 6 months.
Absolutely, because I think with having 6 months of or more than that of emergency fund is not necessarily I don't think it's being unrealistic or anything. I think what we are saying is try and get your emergency account to that eventually. It doesn't matter how long it takes. You see what I mean? So if you are able to, we're encouraging that anything, just put anything aside, even as little as, we normally encourage 10%. If the 10% is not possible, put 100 pula. Anything every month, just put aside. Just keep putting it aside, and then when when you have reduced your expenses, as we've been speaking about it, reduced your priorities, then your priority should be definitely being able to increase your savings. Get to your emergency account. I don't think 6 months is viable in this economy. I think a year. It's actually more viable nowadays. If you can try and have your emergency savings account to up to, when we say a year, we mean you are able to be okay a whole year without income, without image. So try and accumulate it to that, because it's not easy to get a job even within 6 months nowadays, and whatever. So that's basically what we're trying to encourage with and having an emergency account. So now another thing that I wanted to touch on about with an emergency account is protecting your emergency funds by all means.
Yes.
Yeah, let's protect them. Yes.
Yeah. And well, before you get onto that, I think maybe it's also worth mentioning the purpose of an emergency fund.
Yes.
It's to really help you build that cushion.
Yes.
Right? The cushion of savings that you can dig into, or that you can dip into rather, for when you have emergencies.
Real emergencies.
Real emergencies. Like maybe, for instance, let's say, I always say when your car breaks down or you have a tire puncture and you have to go and buy a tire.
Yes.
Then the nice thing, what I absolutely love about having an emergency fund is that it's actually a really good tool that is going to help you avoid getting into debt. Because generally, without any savings, what happens is when you're faced with an emergency,
you then
that
borrow.
is when you go and borrow. Yeah. So having an emergency fund is very, very important if you want to live debt-free.
Absolutely. Yeah. No, it's actually an important one. And how we now say protect your emergency fund by all means is that emergencies are not, emergencies are relative. Like,
Yes.
Can we not have an emergency all the time? And can we not? An emergency cannot be suddenly you need to go out with your friends and it's an emergency. It's no. An emergency cannot be. Suddenly you need to make this trip, unless this trip is like maybe a funeral or whatever, it really has to be a real emergency. Yeah, try and protect your emergency fund as much as possible by not digging into it as often as possible. Try by all means not to. And how do you do that? By ensuring that when you are budgeting, just as we're talking, you are budgeting for your income every single month. Ensure that there's a little bit of money left in your account. That is for little things such as the running to the shop every week. Budget for that. Because you will need those perishables. You will need that sudden petrol and whatever. Try by all means to try and have not to run out your money in your bank account for the whole month, so that you don't have to be digging into your emergency account, and protect it also by not having easy access to it.
Yes.
Right? Yeah. Not an easy. So when you open an emergency, how do you open an emergency account? Let's talk about the process of starting an emergency account. Yeah.
So it's not like there are products, banking or investment products out there that are labeled emergency fund or emergency account. It is essentially what you are the one that would label it as such, but you would use things like a bank savings account, right? Or an investment account. But if it's going to be an investment account with one of the investment managers in town, then that investment account, or you would put that money in funds, in money market funds. You don't want to expose money that's in an emergency, that you're putting aside for an emergency. You don't want to expose it to the financial market or to the stock market, because that one is more volatile. So you want to put the money in what we call money market investment accounts. And these are more like
bank accounts, basically.
Bank savings accounts. Yes, but they are provided by your investment company.
So basically what we're saying is you don't need a nice interest-bearing bank account for emergencies. Emergencies is exactly that, for emergencies. And like you said, they're not called emergencies. You just create an account that is for emergencies. It's just the same as you want to save up for holidays, you get an account for holidays as well. And you say, this is the account that I'm going to save up for my holidays at the end of the year. You can actually do that. So that's basically how we do it. So now let's get into the next one. Bupelo, 2024, tackling debt. We've already touched on debt as we've been speaking, how to avoid it. Let's get into it deeply now. Somebody's in deep debt. They're trying to tackle this debt. How can one start tackling that debt right now so that they can not be in the same situation in 2025? They want to tackle it in 2024.
All right.
Yeah.
The very first thing that I always tell people they should do with regards to debt, managing debt, is stop digging. That is the very first step.
What does that mean?
Because unless you stop digging, you can do all sorts of things.
Yeah.
But then you're going to just circle back.
Yeah.
Stop digging means stop digging yourself into
Deeper debt.
Into deeper debt. Stop
Going back to my Tunisia. Stop going back to
Stop
Motelo.
getting more debt. If you make the decision and you are resolute in the decision to manage debt or bring your debt under control,
Yes.
then the very first thing you should do is to address the issue of constantly going to get debt or buying things on credit. So stop doing that. Just tell yourself that I do not.
Stopping.
Yes, I do not get loans. I do not buy on credit.
Yeah.
Just be that kind of a person, and you can. Because if you don't, you are going to relapse over and over.
You just keep going back.
Yes.
How do you do that? How do you do that when now you're in a situation where you are heavily... No, how do you stop? Yeah, because we need to be practical, right? You're in debt right now.
Yeah.
You have no income coming in. My take home is nothing. And it happens, my take home is nothing. And
are you employed?
Yeah, you're employed.
So you do have the salary.
You have a salary, but my take home is
nothing.
Close to nothing.
Because you're up to here.
Because you're here with debt. Okay. You see? And the kids need to eat. I'm not able to pay my bills. How do we do that? Let's get practical.
So your take home is nothing because of debt. Okay. Then what you do is, after you have stopped digging, it only works.
Stop.
Yes. Then the second thing that you do is you go to your credit providers, right? Go to your credit providers and negotiate.
Yeah.
See which one. If you have like 7 or 17 credit providers, just go down the list to each one of them. Some are going to say no, and rightfully so, because chances are you've been skipping some of your payments anyway, so they're not even...
So why are they going back to them?
You're going to go to them and just present your situation and say, I know that I'm supposed to be paying you 500
can you please
bula.
pause for now?
No, not pause. I know I'm supposed to be paying you 500 bula every month to service this debt. May we please, I forgot what it's called now.
Reduce.
Reduce, yes, but there's a term for it. Yeah, may we please reduce. May you please reduce. Maybe say to 300
or restructure it, because I'm drowning.
And people don't know this, but credit providers really just want their money back. So they are inclined to accommodate you. Yes, I know situations where they have
they do listen, actually.
Do.
Yeah, and they're actually they're not even supposed to be that cruel, actually.
Yes.
Yeah.
So the moment you do that, if like 2 or 3 agree, let's say,
to ease the pressure,
then you know that, okay, pressure eased. I have 1,000 pula left, right? I'm hoping that your accommodation is taken care of in this scenario.
Yes.
Then you know, okay, this 1,000 pula I can use to pay for power, to buy electricity.
You can use it for whatever that you need.
Yes, and buy food. But now we are not buying cheese anymore. We are buying those beans.
We're buying milk. The basics.
We are buying that, I forgot what it's called now.
Like the basics.
The basics.
The basics, yeah.
The cheapest basics. And you speak to your kids. And then you become militant in your home.
Literally.
You become militant. You shout at any and everyone.
Wastage.
That is wasteful. And you, every single day, you become militant, even to your kids, everyone.
No, absolutely. I mean, it actually goes back to the reducing of expenses. For instance, if your house is the one that is costing you more, maybe move into a smaller one and rent it out. You see what I mean? Just for now. Yeah. And then maybe the car is one of the, the debts that you sell the car. So that it relieves you. The 10K comes to you, or whatever that you're paying.
If you have 2 cars, sell the car.
Sell the other one and use one.
Drive together to work. that's actually more bonding time with
Yeah,
your partner.
yeah.
Or if you just have the one car, sell the car, get a cheaper one.
No, absolutely.
Now you don't have a car loan.
Yeah, no, absolutely. I mean, I think we have definitely touched on most of the things that we need to be touching on planning for our 2024. But I would like us to touch a bit on this one, on insurance, updating your estate and insurance plans. I know one of the things that I always think about, Bupelo, is if I die, what's going to happen to my kids? And how do you do and make sure that everything, at least your children are covered and your family is covered. Life insurance. I cannot overstate the importance of having life insurance. And in our country, I must mention how popular life insurance is on attaching it to an asset, versus actually children or your family having money when you actually die. It's so important that we need to communicate this, that it's not only for attaching it to an asset, but you also need to make sure that you have life insurance on how that school fees is going to get paid. What are they going to eat? Because there's no point keep staying in the house and they don't eat. They're going to end up selling it, So I think that's just what, I wanted us to talk about, updating your insurance plans. Check your insurance plans. Check now, have you actually updated to the current expenses in terms of maybe your kids have increased, your expenses have increased and all that. Have you updated your insurance policies to that? Yeah. And all that, go and put your policies wherever they are and speak to your broker. And then the estate.
Yeah.
Let's talk about the estate part of it and writing of wills. Bupelo, yeah.
Yes. So while you're updating your insurance policy, it's not just the cover that you're looking to update, but also your beneficiaries, because your beneficiaries may change.
Yes.
So it's very important that
your kids have increased, or you are now married. It's no longer you're no longer single,
or maybe you are divorced. So you want to remove the ex-spouse from there. So that is
so that's very important, actually. Yeah.
Yes. So that is one thing, and with regards to insurance in our society, I find it very, very unfortunate that we put a lot of value, or we put thought into our funerals.
Yeah.
More than
the life after.
While we are still living, one, right? And also what happens to our loved ones when we are gone.
Yeah.
The funeral, honestly,
just one day.
Botswana, it's just one day.
Yeah, we shouldn't just save up for it only. Yeah.
Yes, and to also be having multiple funeral policies. Personally, that's a concept that I don't
advise,
understand.
And we advise against. Yes.
I don't understand it.
We need to advise against it. Yeah.
Yes, I don't know. I have very strong thoughts on funeral policies, which I won't share now. But if you're going to have a funeral policy,
one is fine.
Can you just have one? Because the way nature works is you die once, and therefore one policy should be enough. It should be enough for you. What you should be prioritizing instead, especially if you have children, loved ones, or dependents, any kind of dependent, you want to get life insurance cover. That is important. I know that as a society, there's the general view that insurance rip us off, or you pay, and then they never, when it's time to claim, when it's time to claim, then they don't pay you back. That is, yes, and it's to an extent it's true, because there are cases, everyone knows someone that has maybe not been able to claim from an insurance policy, but there are many, many other people who get paid. It's really just about knowing the terms and conditions of your cover.
Absolutely. And
it's a insurance policy cover is a it's a necessity, actually.
Life insurance cover.
Life insurance.
Yeah.
I think you don't have to make it bucket loads of money. can start off by doing what is affordable for you.
As long as there's something for your kids when
you can actually go to an insurance an insurer or an insurance company and say to them, Bageso, right now I can only afford to part with 500 per month. Start there. That is something. It may not be enough to ensure
all
the same lifestyle, but it is something. It will take them somewhere.
Yes. Absolutely, you're making a really good point, especially touching on the funeral covers, because I've noticed it's a buzz. It's a hit here in the country. People want to get into so many funeral covers. And I think one thing we should just know, guys, is that the insurers are in business. Okay? The agents are in business. So, of course, they're going to want to sell you more, so they're not going to necessarily think about whether you need it or not. So it's very important that you, as the payer, understands that you don't need this. And this is what you want, and we only advise one funeral cover. This is what you're saying. Yes. Okay. Estate planning. Quickly, let's touch on that one. The wills, the importance of writing a will and making sure we get into that.
So with regards to wills, I'll just say one thing, and I'm not looking to offend people, but I'm just looking to, it's the best way that I can use to emphasize how important having a will is.
Yeah.
Especially when you have children.
Yes.
They say, this is not my own original quote, it's a quote from someone. If you have children, if you have a child or if you have children, it is actually irresponsible for you to carry on life without a will.
Without a will.
Yes.
And you have assets.
We sometimes make the mistake. We really make the mistake, even though we see and hear of stories over and over. We make the mistake that, no, my family is fine. They will
take care of my children.
They will, yes.
They'll be fine. I have a good family, I have a good sister. And
people, we need to understand that when it comes to money,
people change.
People change.
Yeah.
When it comes to money, your children will fight. Your own spouse
will fight your kids.
Whom adores your children. The moment you are gone,
they just change on you,
They will change on your children. These are things that happen every day. So,
yes,
Botswana, it's very important that we start prioritizing drafting wills.
Yes, and the importance of drafting a will is what Bupelo is basically trying to say, is that it protects your assets, and basically what it does is it makes sure you write exactly what you would want to happen. For instance, you want this house, it's going to be still under my children. They're going to live in it, and then when they are grown, we're going to rent it out. And also with other properties, and this is what's going to happen with my money. They're going to divide it equally, or whatever that you'd like to write. And I want this one to get this one ale 21, one ale 18. Those are the things that you actually write on the will. Yeah.
And yes, it's maybe better or easier to engage a professional to help with drafting your will, like a lawyer or maybe a financial planner.
Yes.
But do you know that you can actually do it yourself? You can actually get in touch with the master. Just ask them, what do you need? Because it has to be filed with the master.
Yeah.
What do you need? Or you can just go, whatever write-up that you have done, 1, 2, 3, 4, and then take it to them and say, okay, what is it missing?
Yes. Go. Where's the master at the High Court? Exactly. I think it's important that we note that how you write a will, you can even just Google, write the will, eboya to the master at the High Court. To file a will is literally not even more than 5 pula. Yes. So it's that cheap. Go and file it. Thank you, Bupelo, for coming. We've come to the end of our session. Thank you so much. Our show it's been amazing, and I hope you guys have learned a lot from today. And the importance of planning for the year, and I hope it has been as realistic as possible for you, and the importance of debt, guys, managing debt and reducing debt, life insurance, having emergency funds. These are things that you will hear anywhere. It's because those are the basics. basics of financial planning. And Bupelo, thank you so much for coming.
Thank you so much, Norata.
Yeah, thank you for coming, and we really appreciate your input into our conversations in regards to financial planning. And guys, I hope and wish you a great 2024 financially. Bye for now.